today my stock account has earned $323. US stocks closed down on Tuesday, waiting for CPI inflation data. The Treasury Department cut bids for Treasury bills and issued new cash management bills. So first, let's take a look at my account, including the post-market price. Today, UNG rose for $280, which is a gain of 0.39%. Right now, the net asset of my account is $71,960.27. As for the market today market generally closed down. Dow Jones Industrial Average closed down 0.17%. Nasdaq Composite closed down 0.63%, and the S&P 500 closed down 0.46%. Today, the tech industries generally closed with the most loss. Semiconductors closed down 1.62%, diagnostics and research closed down 1.53%. On the other hand, aerospace and defense rose 1.04%. U.S. stocks closed lower on Tuesday. Investors are waiting a key CPI inflation report due Wednesday and closely watching the federal government's debt ceiling standoff. U.S. President Joe Biden will meet with the House Speaker Kevin McCarthy on Tuesday at 4 p.m. Both sides will cautiously before the meeting that the meeting was just an opportunity for dialogue and was unlikely to make a clear progress in raising the debt ceiling. Biden and McCarthy remain divided in linking agreement to raise the debt ceiling to spend cuts. Biden insisted that raising the ceiling was unchangeable. It'll be the first meeting between Biden and McCarthy in nearly 3 months. For many market investors, the current debt ceiling standoff in Washington is undoubtedly escalating in a more dangerous direction than in the past. Treasury Secretary Janet Yellen said on Monday that a failure to raise the debt ceiling could be an economic disaster. The odds of a quick fix at Tuesday's meeting are generally slim. Neither side has shown any will that it'll change their position. McCarthy was already pushing ahead with a Republican version of the debt ceiling bill in exchange for big spending cuts, but Democrats have emphatically refused. John Leifer, Chief Investment Officer at Titan Asset Management, said, "While we expect the U.S. debt ceiling rate far to be resolved at the last minute, anxiety is now starting to spread to the market." Regional bank PacWest shares rebounded, falling as much as 8.5% in the morning. The stock rose more than 3% on Monday. Investors in Europe and the U.S. are concerned about that the most European Central Bank and the Federal Reserve could keep the interest rates higher for longer, as economic growth starts to slow. Previously, experts pointed out that in the context of the Federal Reserve's continuous interest rates, the U.S. banking industry may not face a series of explosions. The commercial real estate sector is also a crisis. Corporate earnings are still the focus of the market. Lucid, PayPal, and Skyworks were lower after the earnings. Palantir shares jumped 23.4% higher as the market reported strong earnings and upbeat guidance. Charlie Ripley, senior investment strategist at Alliance Investment Management, said, "Throughout today's market, prices are relatively moderate. Investors are relieved that the corporate earnings aren't worse than expected." Traders are waiting for the April Consumer Price Index report scheduled for Wednesday and the Producer Price Index released on Thursday for the latest data on the path of inflation. On the economic data front on Tuesday, the National Federation of Independent Enterprises reported that NFIB Small Businesses Confidence Index recorded 89 in April, the lowest since January 2013. Market expectations were 89.7 versus 90.1 last. Fed Governor Philip Jefferson said on Tuesday that the credit availability has declined as banks tighten lending standards, but he is hopeful that the economy will continue to grow. Jefferson said on Tuesday that after the Fed raised interest rates over the past year to curb inflation, we have data showing that the bank has begun to raise lending standards, which limits the availability of credit that's typical of our stages in the economic cycle. Treasury Department cut bids for Treasury bills and issued new cash management bills. With a growing concern about the U.S. debt ceiling, the Treasury cut its shortest benchmark Treasury bills to manage borrowing demand, while announcing its plan for the three major cash management bills. The Treasury bill cut bids for the 4-week and the 8-cycle Treasury bills, continuing its move to reduce such securities issuance after Treasury Secretary Janet Yellen issued a warning. Ms. Yellen warned that the government should run out of special accounting measures to avoid breaking the debt ceiling as early as next month. Treasury Department announced on Tuesday that it plans to issue $35 billion in 4-cycle bills on Thursday, $15 billion less than the last issue of the same maturity. 8-cycle Treasury bill issuance was cut to $35 billion from $45 billion. The 4th Treasury auction remained unchanged at $36 billion. The Treasury said it intends to issue 3 temporary cash management notes over the past 2 weeks, which will mature around October, expected to be total between $100 billion and $150 billion. Treasury Department will begin issuing $45 billion in 145-day cash management notes on Thursday. The ministry has been cutting back the issuance of the short-term benchmark security sold by the ministry in the weekly bidding in recent months as the ministry takes various steps to avoid breaking the legal debt ceiling. In its May 3rd quarterly refinance statement, the Treasury said the constraint it faced before the suspension or increase of the debt ceiling could lead to a greater than normal changes in benchmark Treasury bonds issuance and heavy use of cash management notes. Replacing conventional benchmark securities with cash management notes gives the Treasury more control over the size of the debt, said Stevenson, a strategist at the Deutsche Bank. The disadvantage, of course, is against the regularity and the predictability. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.